All right, so tax type number 2 is going to be Roth. Now, the funny thing is that Roth is really just the other side of the same coin. Okay, so we're going to pay tax now so that when we take the money out, we don't have to pay any tax later. Okay, so walking through the scenario again, this is how it works on a Roth. Let's say we have that $10,000 worth of income we want to save, but on a Roth, we actually have to pay tax because it's after tax money. When you put money into a Roth, that's after tax money. You have to pay tax on it to get it in there. Okay. So if you pay tax up front, let's just say we pay that same 25% on the Roth and we're left with $7,500. And that $7,500 is going to go inside the Roth and we can invest it. And let's say we grow it at the same 6% rate. Okay. So if we do that, what the Roth balance is going to be is $7,950. So that's now what you've got in the account, and it's after tax money. One little stipulation I would note on a Roth is to take the tax-free withdrawals on a Roth. You have to be over the age of 59 and a half, and you have to have had the Roth open for at least 5 years. Okay. Now there's some stipulations with contributions versus earnings as well. So contributions on a Roth IRA at least can be taken out tax-free at any time, no matter the age, without penalty. It's the earnings that we're more worried about. The earnings don't become tax-free unless you meet those qualifications, 59 and a half and at least 5 years in the Roth. Conversions work different than contributions. We're not going to talk about conversions. So if you want to talk about Roth conversions, I have another video out on that. But as far as contributions, you can take your contributions back out anytime. It's the earnings that need to meet the qualifications so that they are penalty and tax free. Okay. At the bottom, again, we're highlighting in green the different stipulations with the Roth. So no, you do not get a tax deduction for putting money into a Roth. It is not going to lower your income this year by putting money into the Roth. Remember, we are paying the tax today so that we don't have to pay the tax tomorrow. Next column, phantom income taxes. Again, we'll talk more on video 3, but capital gains, dividends, interest, if that gets paid into a Roth account, that's not something you have to worry about in that current year. Tax-free withdrawals. Yes, that is what we do this for. That is what you do a Roth for, so that you can take money out on a tax-free basis and it doesn't have to affect basically anything under the current law. So you just take the money out when you want, and it's tax-free as long as you meet those two stipulations for the earnings. Okay, that's Roth. Okay, now again, if you look at the chart here, it's the same net number. If your earnings and taxes are the same on those two types of accounts, it didn't matter which one you use. So going back to that original question, which one's right for me? Okay, it's all just a guessing game. Am I going to pay more taxes if I tax it today? Or am I going to pay more taxes if I tax it tomorrow? Okay. Normally, I'm going to recommend a bit of tax diversification. Okay. So if you think it's probably going to be about the same rate, it may make sense to tax some, just so you have some in the Roth in the after tax category, so that you have the optionality of where to pull from. Okay. But it just depends on your makeup. I don't want you to have everything in the Roth, because then you could have deferred tax to a later time and paid zero and really low taxes anyway, because you have no other taxable income. But I also don't want it all in the pre-tax, because that's what happens most of the time. I would say, I'd say about half the time people oversave, and that's just a number I'm pulling out of the air. Oversave into the pre-tax, and then they have so much money that they need to take out and tax. They're going to put themselves in a higher tax bracket, and that becomes a different problem. Part 3 coming soon. Next part is after tax, not to be confused with Roth. We'll get there.